Alright, so I'll record this and then I drop it in the Discord and then or the Telegram. Alright, so I'm just gonna give it a few. I mean, that's the whiteboard going over.
Black consciousness. It's good grassroots work. What we do is negotiate, demonstrate, resist. And a big part of that is raising.
Give it one more minute, let people join in. Alright, so before we get started, does anybody have a trading plan? All set, ready to go, what you follow every day? Anyone? No? Alright. So let me just write mine down. Like a summary of it. Oh my handwriting. Bad. Let's see. Wake up at 6. All right, that's always number one. Number two, I don't even think about trading until 7. So between 6 and 7, I'm getting fully awake. I'm getting whatever I need to get started, just getting everything together. Number two, make sure you guys mute yourselves also. So that's always number two. I get focused, right? I'm not gonna focus on trading until I'm like ready to go, until everything's good, mind's right, and I'm ready to get started, right? Number three, I go over my charts and I go over my past trades, right? So I'll go more into detail after I mark all these out. So yeah, 1, wake up at 6. 2, get focused. 3, go over charts, past trades, and 4, I just go through my trading process, right? So for process, whiteboard's so new to me. I'll just keep it as 4. So my trading process isn't nothing like crazy. Like I don't do 10 push-ups before I take a trade, nothing weird. I just explain this. I just get like my mind right. So I even like, let's say I prepare myself to not get overconfident, and I prepare myself not to be like down on myself if I lose, right? So I'm just like, all right, looking for my trades. If I lose this one, it's all good. We'll go to the next one. It's whatever, right? So that's my whole trading, like go through trading process number 4, right? It's not like I'm sitting there meditating for 4 hours trying to put myself together. It's just, quick, whatever happened, right? Number 5 is mark it up and go out through my day. All right, so this is just a brief summary of what I do. And then over here, I'll put my trading rule. London. Trading. Win 3. Slow. So this is my whole trading plan in a brief overview. This is a lot more detailed in my book, right? This is just, like, it's simple, right? Everybody knows, if you know how I trade, I like simple. I don't get too ahead of myself. I know people that have the craziest, like most organized trading plans, and that's good. Me, I like keeping it simple, and You know, it's whatever, however what makes you feel comfortable as a trader. Like you don't have to follow exactly what I do because it might not be what you want to do. It might not fit into your schedule. It might not suit you, basically, right? But two things that I would want you to take from this plan is pick a session and stick to it, right? Find the session that you know and that you know you'll make most valid trades off of. You don't want to be trading the Asian session when you do a lot more better in New York just because you can maybe make some money off Asian, right? You want to stick to what you know and stick to what's going to be consistent, right? And then the next one would be show no emotions. This ties into discipline. This ties into everything that is trading, right? Because trading, it really messes with your head. And I know a lot of people have probably been through that. I have, and it really, it fucks with your head. Like that's being blunt. If you got to show no emotions at all, right? You lose a trade, don't go back and try to chase that trade. Don't go revenge trade. Don't, if you take the loss, just take the loss and get on with your next one, right? Because if you're stuck on one trade, then you're missing all these other ones, right? So that's why I developed this trading plan because I think I wake up at 6 in that specific standard time. Market opens me at 6. So, right, I don't want to trade right when the New York market opens. I just, get myself together by 7. That's when these pairs are starting to make their moves, starting to get more liquid and volatile. So that's when I start looking to place trades. So 6 to 7, I'm just waking up, right? I don't want to be tired. I don't want to be um, grouchy. I don't want to be exhausted. I want to be ready, right? So wake up at 6, drink coffee, do a little workout, do whatever. I don't know, take a run. I don't know, whatever gets you ready, do that. By 7, that's when I'm fully awake and I'm getting focused while I'm going over my charts in my past trades, looking for mistakes, trying to replicate what I did on the winners, trying to stay consistent. And then my trading process. That's when like I said, I keep it simple. I'll go through every single pair on the chart. I don't care if I saw it yesterday and it was choppy, I'll go through it the next day just because there might be something new happening that happened overnight, right? So I go through every single pair. It's not no like 20 minutes on each pair. It's just a quick overlook, seeing what I can see with my naked eye, not really marking anything up, just going through it, right? And then we get into marking everything up. So after I find everything that was valid or stood out to me, I'll go to my trading view, put a little flag next to it. So like these two USD CAD and Euro NZD, I just put these two flags. Those are the trades I'll be looking at. So I'll go through all these pairs, all the ones that I have, move them to the top if they're good, and flag it, right? Another thing I do, this is if you want to do once I'm in a trade, make it purple to know that I'm in a trade and to be watchful of that, to see what's happening. So I'm not like when I'm in a trade, I don't wanna like forget about it. Yes, you don't want to be like constantly watching the trade because it can go negative and you can close it out and then it goes positive all the way to your TP. You just want to be like mindful of what's going on. That way, if it's for sure going to your stop loss, you can minimize the loss and close before, or if it's by TP but it's not making it all the way, showing that it's losing momentum, then you can see you want to be mindful of what the trade's doing, right? Whiteboard. All right. So then that's when I mark everything up. I do it right at 7, just so I can get everything ready because the London and New York is still going on, and then New York takes over around 8, 9 o'clock ish, right? So trading rules. For me, I only really like trading the New York and the London because they are the most volatile, most liquid sessions. I'll go in every session just to look at it to find the setups for these two sessions, right? Because there's no point in me going into the Asian or Sydney session when it's not as volatile, just looking for setup, right? I mean, just looking for an actual trade. I look for a setup so that when it gets to London or to New York, I can get ready for the trade and I can take the trade. I can have my alert set. I can have a limit or a stop set for the trade, right? If I'm asleep, I like to put limits or stops in case the trade follows my analysis and I'm asleep, I can't see it. So am I going too fast for anybody? Just let me know. Or is everybody good? Y'all can turn off your mics, turn them on too. If not, I need to go back to anything. Everybody good?
Good. I'm good.
All right. So trading rules, simple like always. If I lose 3 trades in a day, I'm always gonna stop, right? I'm not gonna be like, okay, I lost these 3 trades. I'm gonna try to make them back. I just stop because there might be something off right at that point where it's like I'm not gonna get too caught up in myself and start showing all these emotions just because I just lost 3 trades. To me, it's just like, okay, whatever. Wait till the next day, right? That's one of the biggest rules I follow because it has changed me a lot as a trader. Before I had my trading plan, I would lose 10 trades and try to make them back and then lose 20 and then try to make those back, and now I'm down 40. And it was just too much going on. 3 trades and out, right? Because I used to play baseball, 3 strikes, you're out. So I took that, moved into trading, lose 3 trades, I'm always out, right? I'm not gonna get too caught up with myself. Yeah, it was a bad day, but we all have bad days. It's better to minimize the bad day instead of extending it and making it a worse day, right? Because you always want to maintain that profitability throughout the week, right? A lot of people try to be positive every single day. And the thing is with that is it can really mess everything up, right? Because let's you use $5 for example. You gain $5, then you gain 6, 7, you're at 8 now. Then you lose $5. Now you're at 3. You gain 2, you're at 5, and then so on, right? Now you're just playing around at that point. That's why 3 trades, I start to take it slow, right? This one is also a big one. So let's say we're at that 8 now. Right, $8, I just won 3 trades, and now I'm at $8. I'm probably gonna take it really slow from there. Not really looking to trade, or I might just put in low lot, right? Because with my trading account, I really only take 2 or 3 trades a day, maybe 4, maybe 5, and I'm up a good amount. So I don't need to be taking 20 trades to be making profit. 2 or 3, and I'm good. So that's why when I win 3, it doesn't have to be in a row. It's just maybe 1 winner, 2 losses, and then 2 winners. I'm gonna just take it slow. I made my profit for the day. It could be anywhere from $100 to $500, so I'm good, right? I'm gonna really just take it easy from there, right? And then last one, no emotion. Whether I win or lose, I really don't care because then I get too overconfident or I get down on myself if I lose. So this one, I'm gonna circle it, square it so many times because it's just a big one. There used to be days where I would deposit like one of my worst days. I deposited $500 and I was trading NAS 100, and I lost that 500 within 5 minutes. So I was like, damn, that sucks. I put in another 500 thinking like, okay, I can make this back real quick. It's all good. And I lost that in 2 minutes. So I was mad. Like I left everything. I was mad. I was about to quit trading that day. But I went to my car. I'm like, okay, you got to get, refocused. And from that day, no emotions at all. This guy. But yeah. Who is that? We don't fight. No, I'm just kidding. But yeah, no emotions. I'm gonna score it one more time. Yeah. So I'm gonna take an example for today. Today I won $200-300, and yeah, it's a good day, but I'm not gonna be like, okay, Monday, here I come. I'm the pro trader. I'm gonna take the market by storm. I'll make $3,000. I'm never gonna think like that again because then I might go into my trades and just miss something just because I'm overconfident and be like, oh yeah, this is gonna go my way because I just won on Friday, so of course I'm gonna win today. At that point, it just seems like I'm gambling, right? So, um, when I mean like no emotions, I just mean throw it out the window. Win, lose, good, bad, sunshine, rain, it doesn't matter. Take every day like you're working at a job, right? You need to keep making the company money. In this case, the company is yourself. You need to keep making yourself money. So you can't be like, okay, today I won, I'm good, I'm on top of the world, but what about the rest of the year, right? You need to be able to maintain a certain amount of income to make Forex your full-time job or to make it your side hustle, right? Whether it be full-time or side hustle, you want it to be something at least, right? That's why I hope everybody's here, right? You take it serious and one of the two. But yeah, if you throw the emotions out, show discipline, follow a strict trading plan, it really takes you a long way and it will really take you from, I want to say not beginner, but just what's a good word? James, what's a good word?
For what?
Or like using your trading plan. Probably I'll say like not amateur to
You have
pro.
to, so you have to stay disciplined, right?
Yeah.
I do this full time. Who asked John? I do this full time. Um, Garrison, he's on the process of doing it full time. He still has his own company that he works for, and he does a bunch of stuff. But that's also because that's the education that he received, and I mean, you know, it pays him well. So there's really no reason for him not to because it fits his schedule well. So since it does, I mean, it doesn't really affect his hours. So he does it anyway. Same
Yeah.
thing with Mustafa. But for me, I do this full time. I have other businesses that I run, right? But I do this full time. So whenever you wake up, like for me, I have to wake up at around 5:30 in the morning. I wake up at around 5:30 in the morning and I chart up from about 5:30 to around 6:30, right? And from that 5:30 to 6:30, and this has been the last week because I haven't been as active the last week. But if you guys see why I haven't been active in this last week, it's because I've been focused on another business that I'm growing, right? But what ends up happening is whenever you look at your schedule and you say, okay, well, how can I fit this in? Who here works at nights? Who works at nights? Like night shifts. Does anybody work night shifts?
I do. I do a
Okay,
lot.
Ciara, what's your
Yes.
hours?
Like, normally I'll be like 4 to 11.
Whew.
Yeah.
Hey.
So 4 in the
And that's
morning
just
to
one
11
of them. Yeah.
so 4 in the morning to 11 in the morning?
No, PM. At
Oh,
night. You said,
I was like,
yeah.
dang,
So,
working like,
oh,
dang.
I thought you said night.
Okay. Yeah. No, I mean I was talking like overnight, like graveyard shift type stuff.
Oh, no. Oh, no. None of that.
But
Yeah,
what time do
no,
you wake up?
that's really what I was asking, but it's okay. So I mean that's still valid. So what ends up happening there, right, is you're most probably going to be awake for London, um, but you won't be available for the end of New York, which is completely fine. But then in that case, you probably go to sleep right after work, right?
Yeah,
Like
normally.
Ciara,
Or if I
like
stay up.
right now, I'm about to make a trading plan for you, okay?
Okay.
I'm gonna make
I'll
a
take
trading plan
that.
for you. Let me share my screen, Garrison.
Yeah.
Sharing on my phone. Let me see if I can draw on my phone. Because my computer legitimately isn't working. Like it's showing that I have Wi-Fi, but nothing else.
Did you do your router thing? Bro, I work at internet though. You know
No,
good.
it didn't work. I don't know why, man. It didn't work.
But yeah,
But
like
okay,
me.
so say Ciara, she works from 4. What the? Oh, here we go. Annotation. So let's say she works from 4 to 11 p.m. Right? Whoops. So this is 4 a.m. to 11 p.m. or 4 p.m. to 11 p.m.?
4 p.m. to 11 p.m.
Okay. So let's say she works from 4 p.m. to 11 p.m. That's fine. What are the sessions there? We have 2 sessions. We have Sydney and we have Tokyo, right? As you know, are you EST? Or are you another time zone?
Yeah. No, Eastern Standard.
You're Eastern Standard. So this is Eastern Standard. So we're going to be talking in terms of relative Eastern Standard, right? So we have Sydney to Tokyo. Now, what characterizes both of these sections? The fact that they're low volume, right? Low volume. Whoops. Which can be a good and a bad thing. Why do you guys think being at work during Sydney to Tokyo is a good and a bad thing? What do you guys think that's
Well,
a
I
bad
feel
thing?
like obviously since it's low volume, there are other sessions that would have a higher volume and areas for me to do more stuff with.
Right. So during Sydney to Tokyo, that's usually when I mark up, right? You'll be able to chart when it's Sydney to Tokyo because it's low volume. The moves won't actually be happening. The problem with this is that you're at work during that time. Since you're at work during that time, you only have the hours of, let's say you get to home at 12, you shower, you're home at 12:30. Let's say you're off at 12:30, right? You have from 12:30 to around 2:30-ish, right, to actually mark up your charts. If you want to select this allotted time to marking up your charts, then you have a solid plan because you're trading, right? The end of Tokyo, well, you're marking up end of Tokyo, London.
Okay.
Right? Since you're marking up end of Tokyo, London, what's that gonna do for you? What's gonna happen is you are now marking up your charts in a session that has low volume, and then you will almost immediately see the moves either play out or begin to play out, right? And that's both good and a bad thing, because by London, let's say by 12:30 or by 3:30, like what time do you usually go to sleep?
That depends. Sometimes I'll be up till around 3 or 4.
3 or 4. Okay, let's say you go to sleep at 4. All right, so you go to sleep at 4. You get a little bit of the volume at the beginning of London. Now, remember what I've told you guys about London. What I've told you guys about London is that the volume doesn't really start until about 5, 6 in the morning. That's why I don't wake up at 3 in the morning like I used to. What I do now is I wake up at 5:30 and I'm catching almost all the volume without having to be up all like the whole time, right? So that came from nights of staying up all night. Just I'm telling you this from experience. So let's say you go to sleep at 4, right? You'll probably be missing the action from around 5:30 to 6. So what I would suggest you do is I would suggest you do the following. I would suggest you mark it up and then you leave it. You go from 12:30 to 2:30 and then you leave it. You just exit. You go to sleep. Oh, whoops, that is not disease at all. But let's say you go to sleep. Now that you've gone to sleep, what you're gonna do is, when you wake up, you say you set an alarm for around 6. What do you do during the day, Ciara? Are you just like waiting to go to work afterward, or do you have other hustles, or what do you do?
I have another job that I work sometimes, but it's only like 4 hours out of the day. So it just depends. Because normally I won't have them. I'll only have them both like twice a week.
All right, that's fine. That's fine. So let's say, what time is that usually?
Like 11 to like 3.
11 to 3, and then from 4 to 11.
Yeah.
Okay, cool. So you have the whole morning. So let's say what happens is you go to, like, you wake up at 6. You already took a little bit of a nap. You wake up at 6, and then you go all the way to around 10:30. Well, then you'd only be getting a couple hours of sleep, and I don't like that. So let's say you wake up. Let's delete that. Let's say you wake up. There's no use waking up at 6. Let's say you wake up. You go to sleep at 2:30. Let's say you fall asleep at actually 3, right? So then from 3, to, let's say, what time? Let's say 8, from 3 to 8. What is that? 3 to 8. That's 3, 6, yeah. That's what, 5 hours? Yeah, 5 hours.
Yes, that's fine.
So you get 5 hours of sleep, right? Let's say you shave this off. Like once you keep getting better, let's say you shave this off to 1:30 or 2. Let's put this at 2. Let's put this at 2 in the morning because you don't need all that much time. Like you shouldn't be taking 30 minutes per chart. You should just be taking, a couple minutes per chart, and you should have a couple charts in your watch list. You go onto your news app or whatever, and then you check if there's going to be any news or volatility for that pair. You trust your markup, you put your limits in, or you enter as you see fit, and you leave it, right? You leave it. What ends up happening? I've been using a lot of stops and limits recently. Reason for that is because I'm not at my phone all the time. As I've started, to develop this new business, we don't have enough money to hire new workers yet, right? Well, we do, but we don't want to use it because we need it for materials, right? We can only hire a certain amount of people. So what do I have to do? I have to get my hands dirty, right? So I can't be looking at my chart all the time. And if I can't be looking at my chart all the time, and am I going to get a sniper entry every single time? Absolutely not. How have I been managing that? Through alerts, through limits, through stops, right? They exist for a reason, and you should use them as well. So let's say you go to sleep from, let's say not even 3. Let's say you go to sleep at 2. So now you have 6 hours of sleep under your belt. Perfect. You have 6 hours of sleep under your belt. And keep in mind, you do not have to stay up for London every single night. You can choose 2, maybe 3 days out of the week to stay up for London, and then the rest you rest. Like the others you rest. You literally do not have to stay up for London every single week, every single day. If you do not see enough volume for London, or if you don't see any setups actually taking place, don't force them. Just go to sleep. You'll be fine. Okay? So what ends up happening is you have 6 hours of sleep here. You have about, what is that? Also, let's say you just go to sleep at 12. Well, you get home at 12, right? So now let's say you have what, 2 hours to mark up? 2 hours to mark up. I don't take more than 45 minutes to mark up a day on the charts. I really don't, because it doesn't take all that long. Right? It really doesn't. But you guys should be having a watch list of the pairs that you guys want to analyze, and you guys should just go straight for them. No distractions, right? Just go to your analysis, technical analysis, absolutely no bullshit. And then from there, you should be going to your to your Forex Factory or whatever, website you guys use to get news. And then from there, what you should be doing is you should be watching if there's going to be an increased volume, meaning is there going to be news or not, right? And then you should set your stop loss accordingly. So then from there, you have 6, 7-ish hours of sleep, right? And now what do? Now you wake up at 8, and let's say you actually get up at 8:30, right? Let's say you actually get up at 8:30. Now you have from 8:30 to around 10, right, to actually trade NYSE. This is what I do because I'm also a stock trader. If you are a stock trader, you can use this system to get you a good open on the NYSE. Before, quick tip to all my stock traders, if you are trying to trade the NYSE, you should take a really, really close look at Euro stocks. At Euro stocks 50 or E6 50, right? You guys should be looking at that very, very heavily because it basically mirrors everything that US 30 is going to do, but just a little bit in the future. So, again, you get from 8:30 to 10, in which New York volume spikes, right? New York volume usually spikes around 9. So because of that, since the market's open and everything like that, you're going to be able to have enough volume for you to be watching your chart and saying, hey, the trades that I'm in are going okay, not a big deal, we're doing good. Right now, this is the one where you don't even need to go all the way to 10. You could just wake up at 8:30 and check your trades and then go back to sleep until 10, right? You don't need to be watching the chart extensively if you're not a stock trader. If you're a stock trader, you want to be awake for the New York Stock Exchange Open, right? I'm just saying this in a general sense. Now, next things next, if you guys are starting to say, okay, I think I'm getting this, you have to build it around your schedule. You shouldn't be staring at your charts all the time. If you are in a trade and you can't stop staring at the chart, it's best for you to scale out, put down your phone, and focus on whatever else you're doing, right? Because it's not okay for you to obsess over a trade like that massively. So let me see if anybody has commented at all. Garrison, you're recording, right? Still?
Yeah.
Cool. Are you sure? Yeah, you
Yeah.
are. Okay. So again, a lot of people have different schedules, but this is something that I would follow, Ciara, like for you. If you don't want to trade NYSE Open, that's completely fine. You can just wake up at 8:30 and just check it, right? Check your trade, check how they're doing, look over your charts again, see if structure is broken, and then you can go back to sleep if you want, right? For me, do you guys want to know my personal trading plan?
Yes.
I'll give it to you.
Yeah.
I mean,
Yes.
I'll tell you
Yes.
how
I
I do.
thought we was gonna go ahead and go for it.
All right. So this is how I do it. And I'll give you two scenarios. The first one is when I'm busy, right? Meaning like this last week, like how I've been managing this last week. Because getting your hands dirty with HVAC means demolition, means rough-ins, means all this other stuff. And it's tough. But I'll show you how I do it when I'm not busy. So when I'm not busy, I do something like this. I usually get around my charts. Let's say we're done with classes. When I did classes almost every single night. Let's say I finished classes at around 10:30. From around 10:30 to 11, let's put 12-ish, right? I'm usually kind of relaxing, right? So this is kind of like the mindset clear. When I just kind of doze off and I'm like, okay, cool, we're good. Now, from around this time, I'm also just marking up my charts from 10:30 to 12. This is straight Tokyo. This really isn't Sydney. Sometimes I do it a little bit earlier with you guys, but usually my personal time to look at charts is 10:30 to 12. Usually the market isn't moving very much during that time. So what I do is during this time, I'm marking up my charts, right? And then from there, it doesn't need to be this if you don't want to be up this late. What you can move this back down to Sydney. You could do it from 6 to 9, or from 7 to 10. You can do whatever you want. Just give yourself a good amount of time for you to be looking at the charts, right? Especially if you're a beginner. So next thing that I do is, this is my personal plan as well. So I usually am more of a night owl than an early bird, but that slowly has been switching. So I have, a couple hours. I have about an hour and a half ish to actually, mark up my charts. And then from there, I go to sleep. I go to sleep from around 12 to around 6:30. Right. So that's about 5.5 hours of sleep. Sometimes I go to sleep earlier. Sometimes I don't, right? Sometimes I wake up a little bit later. But usually this is the target time that I want to go for. If I usually don't go for it, if I'd say more of an estimate, I usually say I wake up around 7. Right? So then from there, I get a good night's sleep. I don't have to worry. I check my trades in the morning, and then I see it, and I'm like, okay, cool. My trades are this, my trades are that. I check it from around 7, but from here, I stay awake. So from 7 to around 10, I'm actively trading. Right? This is where I'm inputting trades. This is where if my NYSE portfolio, pops up and it's like, hey, big moves are incoming, then that's when I start looking at those charts and I'm like, okay, cool. We'll do this, we'll do this, we'll do that. And I can micromanage my trades from there. Right? But that's only given me, this luxury is only being given to me because of this allotted time that I have out of the day. Now after that, I have to go, do other stuff. So let's say from around 10 to around 3, I'm busy, right? Let's say from 10 to 3, I'm busy. Now, what happens is from 3 to 5, I'm watching the market again. I'm watching the market again. What do you guys think I'm watching the market again? I'm watching the market because that's really, really close to closing, right? So we see how it does at, London, not London session, New York session's about to close, right? So this is PM, by the way, not AM. This is AM. No. Yeah, no. This is AM, PM, right? So let's say, New York session ends, banks close, broker's hour, right? So because of this, I'm looking at this and saying, okay, cool. Let me look at my charts. Let me look at my trades. Let me check that they're doing nicely. Let me check that they're not doing nicely. It just depends. I'll be watching. So then from there, what do? Is I wait until 10:30 again. I give myself time to relax, spend with the family, do whatever the hell I want to. And then from there, I look for more trading opportunities again at 10:30 to 12. And that's usually how I do it, right? That's usually how I do it. Does that mean that you need to do it this way? Absolutely not. You can create your own trading plan around, your own time frame or your time zone or time availability, wherever the case may be. And remember that, when you guys are crafting your own trading plan, you should always make sure that you have time to rest. Because if you don't have time to rest, oh my goodness, you're going to come crashing down. So that's what I do, right? And remember that building a trading plan isn't just what times you're going to be trading. It's also going to be how you're trading. So how I'm trading is usually I say, does everybody have this saved, by the way? Now, usually what I do is I say I have a couple sets of strict rules. Now, I don't have many rules, but they are very important. So don't overwhelm yourselves with rules. Just make yourselves a simple checklist. First thing on that checklist should be proper leverage. Doesn't matter how good you are at trading if you don't have an account to prove it, right? Because of that, what we're going to do is we're going to stick with proper leverage, right? Proper leverage, always, 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 always keep your account in mind. This thing's like your little baby, right? If somebody attacks your baby, you're going to be pissed. That's the same way you should be with your account. You should be very, very protective of it. Now, the next thing that needs to be in your trading plan, could you guys mute your mics, please, if you guys are just coming in?
That's somebody's account crying.
Yeah, for real. So then, the first thing is proper leverage. The second thing is your technical analysis, right? How many verifications do you have on that technical analysis? Meaning, say, you want to sell XXXXX, right? What you're going to be doing is you're going to be saying, okay, let's say, I have my fib level, and this is depending on your strategy, whatever strategy you may have. This is depending on my fib, check. This is depending on my supply demand zone, check. This is, a strong candlestick confirmation, check. Cool. What does your 15-minute look like? Is it going in your direction? Yes. 15/5-minute entries, right? For yourself to be able to not get faked out as much, you should be more consistent in the market with that. Now, whenever it fills all of these check marks, that's when you can say, okay, I can confidently enter. I can set my stop loss that makes sense. Now, what is a stop loss that makes sense? A stop loss that makes sense is basically a stop loss, right? That you aren't just throwing out there because it's 35 pips. A stop loss that makes sense is a stop loss that you're placing because you either have reached a you've reached a what was I saying? Sorry. Uh, my mind just went completely blank. What was I saying? Um, can somebody remind me of what Garrison? What was I talking about? I completely blanked out, and I don't know why.
Entries on your
Right,
trading
right.
plan.
So whenever all of these checks are being followed, right? Whenever all these checks are being followed, that's when I can confidently enter. Right, the stop loss. So the stop loss should be at a market structure. I'm very sorry. Yeah, Bob Ross would call that a happy accident. That I don't know why that happened. I've been overworking myself this week. But so whenever your stop loss makes sense, what is a stop loss that makes sense? Basically, is it at a market structure? Is there market structure? Is it a fib level? Is it maybe a previous order block? Or is it a fair price void? And Breeze has been putting me on fair price voids. Oh my God, those are nice. But they're useful, right? They're useful. So is it a retrace? Is it a pattern? Right? A lot of people just put their stop loss somewhere because they think, oh, 25 pips, oh, 30 pips, all that. And then their stop loss gets wicked and they're like, why did it get wicked? Why do I lose so much? Maybe because your stop loss makes absolutely no sense. They put it in the middle of a zone and they expect it not to get retraced. Right? And that's very annoying to me. Does everybody have this written down? Or screenshotted, whatever, doesn't matter. Can I take this off? But
I'm good.
so next, right, a lot of people end up asking me, how do you compound an account? And I know a lot of people have been asking for this. How do you compound an account? How do you grow it? You guys saw me take 100 to 370, right? And now that it's sitting at 370, I just withdrew a little bit, right? Putting it back at 200. Now, how do you do that from an $100 account? A lot of people may be asking. Well, let me tell you something. Whenever a signal is called, or whenever you're doing your own personal analysis, you guys should be waiting for the lower time frames to line up. Because even though the 4 hour, the 4 hour, the daily give you, the overall gist of the market, or, like where they give you better structure information, what you end up not seeing on the 4 hour or the daily is all the little stuff, right? You don't see whether or not the downtrend, sorry, whatever trend that's going against you. Let's say, you're trying to bring something down. So let's say, the 15-minute is still bullish. Do you expect it? Like, do you expect to catch the top of every single move? You shouldn't, right? You shouldn't want to catch the top of every single move. What you want to be doing is you want to be riding, that wave that it creates down. So the 4 hour and the daily completely ignore the lower time frames, meaning they ignore how price reacts around those zones. However, the 15-minute to the 5, they show you how immediate price action affects the bigger time frames. What do I mean by immediate price action? I'm saying that if the 15-minute is on a downtrend and it's a strong downtrend, what's the 4 hour, what's the 1 hour most likely going to show? It's going to show a straight drop, right? With a little bit of wick here and a little bit of wick here, right? That's what it's going to show. Now, what ends up happening next? What you guys have to realize is that these small time frames feed into the larger ones. And if the larger ones are supposed to be, they're supposed to be, holding the keys to the universe when it comes to technical analysis, why don't you? And this is a riveting new idea. Why don't you set an alert when your entry zone gets hit? Whoops. Why don't you do that? A lot of people don't have the experience to do that, and that's completely fine. But that's what I do. I'm not looking at all my charts, but it says like I hit my phone, my phone vibrates, and it says, "Hey, EuroCAD just hit your level right here. Just hit right. I name it buy limit hit right or some shit like that." And then from there, all that I'm doing is I'm just watching for a quick entry. Since it already hit my zone, I just I look for my good entry on the 5 minute or the 15, and from there, I'm I'm good. Because all I do is literally I already analyze this pair per my trading plan, right? My trading schedule. Since I already allotted that time, I don't have to allot any more to it. All that I have to do is remind myself what happened, with the note with the notes that you take in your trading notebook, and then just finish up, right? What you should be doing is just finishing up. You shouldn't be doing anything else. So yeah, let's see. What did somebody say? Apologize, people. Is the 5 minute or the 15 minute better? They go hand in hand, and let me explain why they go hand in hand. The 5 minute can pump fake you really really quickly. It can pump fake. It can pump fake you really really bad. Why is the 5 minute so unreliable? Well, because it basically basically what ends up happening is the 5 minute moves too much, right? There's way too much volume on the 5 minute. The 15 minute is going to show you the general direction, right? If you look at the 1 minute on, the 5 minute on big pairs like US 30, right, or other pairs like that, um, what's going to end up happening is a lot of times you're going to miss market structure because you're too zoomed in, and you'll be like, oh my goodness, why did the market shoot? Or like, why did it fall? And you just you just completely forget how to zoom out of your chart and look at higher zone market structure. Now, for indices in gold, you should only be using the 1 hour, not the 4. Next up, well, they both work with the 5 minute entry. Okay, cool. That's Garrison explaining. Why 15 minute and not 5 minute for entries? You get double the candles. It's practically the same thing. You'll see almost the exact same things, but it's just more convenient to do it other ways. But yeah, why 15 minute, not 30 minute? Again, there's just there's more cards in sorry, not cards, candles. There's more candles in the 15 minute rather than the 30 minute. So you'll be able to analyze the pair a little bit more closely. Yeah, guys, that's usually how I do it. Now, so whenever I see on my phone, hey, USD, Euro CAD hit this line or is crossing this line, then what I do is I just kind of zoom in on my 15 and I'm checking every once in a while. Every 2 minutes, I'm just kind of checking my phone. And I'm like, boom, all right, has it entered? Nope. Has it entered? Nope. Hasn't, whatever the case may be. What I'll be looking for is, I'm looking for my entry into the pair that I had already helped, right? Or that I already studied, or sorry, I'd already, been waiting for the hit of the zone. The same, you guys can do the exact same thing with your trading views. You guys can be doing the absolute same thing, right? You don't need either MetaTrader or trading view to really dominate the charts. I use trading view because I really love its alerts and it's just elite. But yeah, So that's basically my trading plan or my trading schedule for everybody that was wondering. And you know, from there we will move on. Does anybody have any questions?
What what? So you said you can pick specific days a week. Are there certain days that would be prone to more news or prone to different things that
Wednesday and
anybody
Thursday.
can just be aware of? Wednesdays and Thursdays. Okay.
Mondays, Wednesdays, and Thursdays. Usually. Those are the times where you can get up and really make some, you guys can make some progress, or if you guys don't want to use that, you guys can absolutely go do something else, right? Who else had a question? I thought somebody else had a question. No, nobody. Did everybody understand what I was trying to say with this call?
Yeah, it made a lot more sense to me.
Now, what's to come is everybody in here is going to be trying to call their own trades. So just be careful whenever you guys are mentioning a trade, because anyway, let's see what else. Nothing else. Let me see. What else? Cool. I think that's about it. Now, whenever you're trying to compound an account, you do not need to hold giant swing trades to flip the account. What you can do is, first off, remember that slow and steady is better than fast and you just kind of got off to a bad start to the day. But what's going to end up happening is you do not need to be holding to the 400 pip TP that's going to take 2 weeks to reach, and you just wouldn't need to deal with that. Now, next, what ends up happening is you're looking at say you're looking at around 200 pips in profit, right? Like USD CAD did earlier this week, or USD JPY, or GBP JPY, or anybody, right, in that matter, or US30, which I made quite a bit of money off of that. So let's say you have this number right here, right? My internet is cutting out. I don't know why it keeps showing up a pop-up saying that I have no internet. Can you guys hear me correctly?
I can hear.
You can hear? That's weird. I'm getting like feedback on my earbuds, and my earbuds are new, so I know it's not the earbuds. Maybe somebody's not muted. I don't know. That's weird. Anyway, let's say you're seeing 200 pips in profit. Let's say you're saying 200 pips for UJ or UCAD, GJ, right? Whatever the case may be. You're looking at 200 pips in profit each. Why should you take this instead of letting it swing for that 800 pip TP? Well, it's better, right? It's better if you just secured half your profit halfway through, right? And then if it does end up, hitting that zone, and whenever you guys are sitting with this much in profit, you guys should be taking it, because if you're not taking it, you're basically leaving money on the table. Could it go lower? Yes, but is your account size large enough to hold that? Yes, So what's going to end up happening is, let's say you secure 150 pips in profit. And let's say, your starting account was at like 100, or, whatever the case may be. Now, what you do is you just got 150 pips from school. Sorry, not from school, from what the hell? Not from school, from these pairs, right? So you got them from these swing trades. Now, once you've gotten them from those swing trades, you take profit and you say, okay, I just flipped my account a total percentage, right? And then from there, what you want to do is you want to say, okay, maybe I'm not having a good day. You step away from the charts and you say, all right, I'll leave it for tomorrow. Stick to your trading plan. If you guys seem to be trading outside of your trading plan, don't give yourself a slap and say absolutely not. Don't do it, right? So you got to be very, very, very careful with that. But yes. So if you're up 200 pips in profit on a couple of trades, what should you be doing? Closing half the lot size, or just close in general and secure your profit. Because if you close in profit, there's nothing wrong with it. So you'll be fine. So that's basically it, guys. There is no big secret to compounding. The only thing that there is saying, okay, you go into a trade in the mindset of how much can I lose, not how much can you win. The reason why you usually do this is because of the fact that whenever somebody goes into a trade, they'll pop a point, 4 on SPX, or whatever the case may be, and they try to over leverage their account and try to flip it really, really quickly. That doesn't work. It takes time for you to it takes time for you to even make 50% return, right? Which in this case, if you're 100 and it's 14% return on your investment, then you'd be making $14. Now for a lot of people, this is 15% a month is a ton for giant, enormous traders. For us, 12% a month isn't bad. Well, not a month, sorry, a week. It isn't bad, right? Because you refurbish this, you refurbish that, you have other problems, and you got a little bit of money on the side. Now, what ends up happening is, in this case, a lot of people, what they do is they sit in front of their computer all day. They have nothing else to do, or they've basically given everything up and they've been addicted to trading, even though they haven't had a consistent results. And what's going to happen is, what you're going to do is, you're not going to build consistency. You're going to build bad habits, because staying up every single night does nobody right. Right? So basically what I'm saying is, if you're comfortable with that profit, take that profit. You don't have to wait for us to say, oh yeah, TP hit. Because at the end of the day, if you guys are securing your profit, or at least moving your stop loss to profit. Now, what does stop loss to profit mean? It basically means, say your entry's right here. You move your stop and say, you're going for a sell. So your stop loss is usually like up here, and then you take profit down here. So what you want to do is, you want to move the stop loss in front of this, and boom, there you go. Now, if price does, something like that, where it goes back and stops you out break even, you can get stopped out break even and nothing happens, right? You didn't lose that trade. So yeah, guys, that's basically how you do it. You want to focus on 3-ish pairs, on 3 or 4-ish pairs, and then from there you just want to practice those, right? That's basically what you want to do. Don't try to be jumping the gun and jumping straight into indices. That requires a lot of technical experience, and you guys need to be careful with those. So basically what I'm saying is, secure profits, make sure those profits end up in your wallet, and make sure you guys are withdrawing your profits, right? Because if you guys aren't making withdrawals, then what's your point, right? So that's something that's going to help you guys a lot. But yeah, guys, that's basically it. Also, can you guys mute your mics, please? Well, the person that's making noise, can you please mute your mic? Thank you. So yeah, guys, that's basically about it. When it comes to consistency, what you really need to do is, you need to be watching your 4 hour for analysis, and then watch your 15 for entries. That's what you want to do. And honestly, I mean, it comes with practice. I wish I could explain it a little bit deeper, but it comes with practice. Use your fibs, and you'll be fine. Those points aren't bad by any means. So yeah, does anybody have any questions?
Ooh, can I say one thing?
Go ahead.
Yeah, so like one thing that I tell everybody is, would you rather have short-term check or long-term wealth? Because me, I'm going for wealth to, some days I can be like, all right, I'm gonna take this week off from trading. And you have the ability to do that. Like, just let that sit in while you're trading. Always stick to your profit and just keep building every day, whether it be, doesn't matter if it's $1 or $100, building. Right.
Right. So that's completely perfect. So, not leaving money on the table, right? No, where did I go? Cool. Let me see. Anybody have any questions in the chat? No?
No.
Cool. Did that trading plan help you, Ciara?
Yes, it did a lot, actually, a lot.
Awesome. Cool. Awesome. All right, guys. Well, that's going to be about it from us today. Remember that the key to consistency is being properly leveraged and making sure that your entries are on point. Now, one thing that you can do, and don't tell anybody I told you this, but let's say RTP is 25 pips or 35 pips, right? You don't want to risk that much with the high lot size. So what you want to do is you want to be watching that 15 minute, and if you spot, a break to whatever side you want it to go, then what you want to do is you honestly just want to go ahead and say, all right, what the hell? Did I just cut out again?
I think so.
Dude, my internet is tripping. What the fuck? What was the last thing you guys heard?
Think about like,
You said the thing about
Lot
consistency and
sizes and stop
lot
loss.
sizes and
Oh,
stop loss.
right. Okay, cool. Because, oh my goodness. They don't want to, they don't want, the internet doesn't want you guys to learn. So what ends up happening is, let's say your stop loss is 25 pips. Right? Let's say your stop loss is 25 pips. And, or 35, right? Say you're trying to build up a small account, and this isn't on 100, this is like a 200, right? And say, you have, you pop a 0.10, right? But then you only have about 7 or 10 pips in stop loss, right? So the max that you're losing is $10. Is that a lot? Yeah, I mean, it's about 5% of your account. But what ends up happening is you want to be watching your entry on the 15-minute or the 5, right? So you watch basic structure with the 15, and then you want to catch your sniper with the 5. And then what happens is you have a 10 pip stop loss. So if it hits your stop loss, you lose 10, 10 whatever. And then from there, if you don't, you just made bank, right? But you had to tighten your stop loss from 25 to 5. So doing that in itself is challenging to do because sometimes you'll get wicked out. So what you want to end up doing is you want to reduce your risk by saying, hey, is this good to get in? I do my own little analysis, and then I say, okay, cool, I agree with that. All right, awesome, right? And then from there, you basically, continue on about your day. So what you guys don't want to be doing, what you guys do want to be doing is if you guys find a way to say, hey, that leverage is a little high. Well, yeah, but my risk was only 5 pips. My risk was only, a couple pips. So if it does end up hitting that stop loss, it won't really matter as much as our TP of 200 pips or 250 pips or whatever gets actually hit, right? So yeah, that's basically it, guys. Garrison, is there anything else you want to say?
no, that's pretty much it for this Zoom at least.
All right, man. Well, I appreciate you filling in for me at the beginning. That was a very, very big help. I
Yeah,
hope
for
you
sure.
guys have learned, and I hope that you guys, actually take something away from this and use it and create and forge your own trading plan. If you forge and create your own trading plan with your rules, drop them in the chat. Maybe somebody has a similar schedule to you, and they can just adjust a couple minutes. You'd be affecting people. You'd basically, be affecting people. So, yeah. Uh, Thank you guys so much for coming. I appreciate you guys for being here, and I hope this taught you something. Did it teach you something?